Aggarwal, Senior Group Vice President and Head of BFSI Institutional Equities, and Motilal Oswal Financial Services is now joining in. Nitin, great to have you on the show today. Let's begin with your opening thoughts on the Q4 update, and then tell us 2-3 banking stocks that stand out on the positive side and negative side.
Yeah, hi, thanks for having me. So several updates have come on the bank side, and most of them are on the positive side, and many of them have gone on to beat our estimate for the quarter. While we definitely had an idea already that the loan growth will likely be strong as reflected in the system numbers from the RBI, but many banks have gone on to report a high single-digit loan growth on a sequential basis this quarter. And within that, even the larger banks, if you look at the HDFC Bank reporting a pretty stellar kind of a deposit growth, and even Axis, which reported again, it has been doing well as given that their guidance to beat the system growth by 3% over a 3-year basis. But the bank has done quite well over this year, and therefore it's pretty much on the right track. And amongst mid-sized banks, RBL clearly stands out with a double-digit growth that they've reported on the business front, and kind of a precursor to how the growth numbers can change once the deal concludes. And the other bank that stands out clearly is AU Bank, which has also reported a very strong business growth both on advances and deposit side.
Okay, so RBL and AU Small Finance Bank on the mid-cap banking side. Any misses?
I will say that IndusInd, which has been reporting a slight decline quarter to quarter, that trend has continued, and probably it's in the last leg of that, as the focus remains on cleaning up the balance sheet and improving the net NPA ratios. And hopefully things will start to turn the corner from FY27, but this quarter there is again a marginal decline that the bank has reported. So it's more like a flattish, I will say. And the other is like IDFC, wherein the Q on Q with the deposits have been broadly flat, given the recent developments.
Yeah. Nitin, good morning, Prashant here. We had Jairam of Piramal with us on Thursday, and he was basically making the point that, when there is a shock, it's not as if people immediately stop paying, right? That comes a little later. And he said this will, whatever is happening, and we don't know how long this will last, and that's the critical question, how long this will last. The longer it lasts, I guess there is more pain across the board. But he said, well, expect all of this to show up in the second quarter. He said July, August is when he would expect, some spike in NPAs in those segments. He said it's small, it's not very large at this point. These are smaller segments, MSMEs, etc. Any thoughts on this, Nitin?
No, I agree to that point. And while going into the preview, we have just cut numbers by around 2% for PSU banks and marginally 1% for private banks. And that is a reflection on how the bond yields have gone up, how the deposit rates have not been able to come down to the extent that one was looking at 3 months back. And now the wholesale deposit rate, the CD rates, they've all gone up quite considerably. So all of that will have a bearing on the margin expansion that we were earlier looking forward to. So which is where we have toned down our numbers, but we have mentioned that the risk to the earnings is more on the downside. Going into Q4, most banks have indicated a pretty steady asset quality, and our numbers therefore reflect continued strength on that front. But yes, if this crisis, the geopolitical situation which is going on, remains like this for another month or so, then yes, there is a implication that it will have on both the loan growth and the asset quality. And because, you will see cut, yes.
Yeah, he also said that the first 10 weeks, and we've heard this from others as well, he said, he said we don't know what changed, but the first 10 weeks of this year were incredibly strong in terms of loan growth and disbursements, etc. And then, of course, this entire thing only started about a month ago, late February, right? 27th, 28th of February. So, even you think this credit cycle was looking like it was starting to pick up. That gets punctured a little bit, Nitin?
That's a possibility, yes. So far, for this year, we are looking at a 13.5 to maybe range around 14% kind of credit growth for this year. And our estimate is that the growth will sustain at 14% CAGR over the next 2 years. But if we see this scenario playing out with the resultant impact of elevated crude prices, some problems around the supply of the gas availability, and businesses seeing some interruptions, there will be an impact on the overall system growth, because this pickup in credit growth so far is pretty broad-based. It's just not any one segment driving it. It's like the retail, industry, services, all the segments are going at a healthy run rate and then seeing some pull-up. And so there will be some moderation, and the overall GDP growth also may see some cuts if the scenario goes on for another month or so. So there is a risk that we see clearly that is there on the downside.
Nitin, do you look at Bajaj Finance? The AUM growth of 22% is in line with their guidance for the full year. But deposits are down 4%, so clearly facing some pressure on deposit mobilization.
I think deposits has been a challenging area, not for the entire system, I will say. And most banks are finding it difficult to raise deposits given how the overall credit momentum has been. And Bajaj Finance, in particular, I think might have deprioritized raising that much of deposits because the yields, the deposit rates have hardened quite significantly. The wholesale deposit rates, the CD rates have gone up very sharply in the last few months, and there is a possibility, therefore, that the company might have deprioritized raising deposits, especially in this quarter.
Have you had a chat with some of these smaller banks or NBFCs on account of the stress that's building up in the MSME sector? It may not be pronounced in the Q4 numbers, but it will show up at some point. Credit costs, maybe banks are turning cautious on lending to MSMEs. What has been your takeaway, the feedback on this issue?
I think investors are watching out the composition of SMEs across lenders, and therefore to make a sense as to where the vulnerability is more. We have historically seen that in any macro shock, SME, MSME are the segments which get interrupted the firstly, and they have limited resilience to showcase, and which is where there might be asset quality implications if this crisis goes on. But for now, till maybe like where we are till now, it is still manageable. It may have an impact on your profitability or the revenues, but not as much on the asset quality side. But if this goes on for another few weeks, I think then this will have a bearing on both the loan growth and asset quality. That's what most lenders have indicated to us also.
Okay, all right, Nitin, a good chat. Thank you very much, and hope you come back after the numbers in the fourth quarter as far as BFSI is concerned.